Welcome YouTube. Welcome to part 3 of my Orderflow series. Okay, so if you haven't watched watched part 1 or 2, I do recommend you watch it in the right order. That's why I'm actually like doing this course. Okay, I like to have a structured way. So in the first video, we went in what is a limit order, what is a market order, the difference. Okay, I do think the first video isn't the best. I might redo it at some point. The second video, although, is pretty good. So in the second video, we did go over the times and sales, okay, what these numbers here mean, what big buyers mean, institutional buyers, sellers, and stuff like this, okay. So now in today's video, we're gonna go over the market volume profile, okay. So like here, these bell curves, which I call them, okay. I do have this name from FatCat. I do have most of my trading style from FatCat. He's a better trader than I am. I do shout him out in pretty much every video because I do think credit should be given where it's deserved, and he deserves all the credit in the world. Okay, so let's go into this. Okay, so like these bell curves here, okay, you have to look at them. Okay, these are the market profiles. Okay, like, and you can have beautiful bell curves like this here. Okay, and then you can have kind of awful bell curves. So you could theoretically, like, I'm gonna make this a little bit bigger here. You can theoretically, okay, look at this bell curve as one bell curve, okay, like it's kind of one because you only have a low node here and here, okay, and but you also have like within this bell curve you have 3 bell curves. So the thing is with bell curves, they're overlapping, okay, like one bell curve has another smaller bell curve in it and stuff like this. So every time frame has different bell curves, and one bell curve goes into another bell curve. And if you do see like bell curves overlapping, and like, then chances are getting higher at these points to be good. Okay, like what are bell curves in general, and what does this even mean here? Okay, so I'm gonna break it down from the very start. Okay, so this is the volume, so the number of contracts that have been traded at each price, okay, on the bid and offer. So like on this price, there's been that amount of numbers of contracts traded. And usually, like, I do like to think like the market always tries to be fair value, okay, because what is a futures market? It's what the other people really think that the price should be worth, okay. Like, I'm not buying at a higher price than I think the product is worth, okay? And I'm also not selling at a lower price that the product is worth. So the market, like, in theory, should always be at the fairest price, okay? Like, which most people agree upon is the fair price. That's where the price is from the market, okay? Because if, like, people would think this should be worth more, they would just buy everything here, okay? Basically. So if you break it down like this, okay, so, and that's why usually, like, you do see this this bell curve's been trading back and forth, okay. So like at the top there's less interest, okay, like because here, like, less people think, okay, this price is like actually how much this is worth. This is should be cheaper, okay, so I'm not interested in buying here at these high prices. So then the price gonna fall back down, okay. Like here, very many people agree, okay, here, like, this is pretty fair. Like, let's say right now the 49s are pretty fair, okay. So like most people agree, this is also the point of control where most contracts have been traded, okay. That's why it's this color here on my thumb. Like most people agree 49.25 is where it's fair at, where's the fair price. That's most people have been traded at, okay. So you do see it coming back and forth of these bell curves, okay, and these low nodes where there's not really entries the interest, okay, in buying or selling. At these low nodes, okay, like where you don't see any prices, it's kind of acting like support and resistance, okay. So like the price goes up here, then goes back down here, might play around here for a bit, okay, then comes to the low, tests this here, like, okay, nobody's interested in selling here, goes through the middle a bit, chops here around a bit, then goes back to the top, okay. So like that's how it usually behaves. But obviously at some point, okay, like with regular support and resistance, because of news or just price action or just in general, like, okay, it's like somebody's like thinking, okay, like I do think this price should be worth more. I do think like 50 is cheap here. I do think this should be at least worth 55, okay? So like then here's someone comes in, okay, and just starts buying, okay? And everybody who's willing to sell here, just he buys all these contracts here, okay? All the way till 55. Why? Yeah, because he thinks it's worth 55. Just as simple as that, okay? And then the market has to, if it's a new bell curve in a new era, has to figure out again, okay, like if this guy, okay, this, for example, if it's a big institutional guy pushing it up here, okay, or obviously it's always more people than one, but if it's someone is pushing it up here and he thinks, okay, this is at least worth 55s, if price comes back lower, obviously he's gonna buy here because he still thinks this is worth 55, okay. So now the market has to figure out a new range, a new bell curve, okay? Because other people think now, okay, maybe if he thinks this is at least worth 55, maybe it's even worth 57, okay? So like some people try to buy it up here, but then, okay, no, this is too expensive, okay? Like market is falling back down again, okay? So like that's why there's a new bell curve building, okay? And that's why you then usually say trading it around this new bell curve again, okay? Until eventually, like, maybe this buyer says, okay, actually, I've bought now lots of contracts here, okay, like in the 50s up to close to 55. Now some, let's say, retail idiots, okay, come in and pushed it all the way up here into the 60s, but I don't think it's worth 60. Like, I give this maximum of 55, okay, so like he starts selling all of his position here into the 60s, okay, and now, since he sold all of his position, like price is coming down again, and he thinks, okay, like, okay, I'm calling it for the day, I'm no longer interested in trading, for example, okay, now he's no longer here to hold this price up, so this can now fall back in, okay, so that's how you kind of have to look at this in the market, okay. So anyways, I'm drifting up a little bit here, but I do think it's like kind of important to explain all this stuff, okay. So what I usually look at when I look at this bell curve and how to trade them. This is obviously what you're here for in general. Okay, you want to get an edge out of this and not just like hear me wobbling and talking for like 30 minutes again. Okay, so how I trade these bell curves and I think how they should be traded is obviously like these low nodes are kind of support and resistance. So you always should try to short off the high of bell curves and try to long the bottoms of the bell curve. But obviously not in every scenario, but because sometimes obviously like it can break and go into price discovery, or it can break through here and accept this bell curve again, okay. So when do you really want to enter, okay, and this is what I want to talk about now, okay. So usually and that's where also the first video 1 and 2 of the series come in handy, okay. So I do think like price moves in between these bell curves, okay, and then tries to at the low, and if it rejects off the low, for example, and you don't see, or if you see it approach the highs now, that's easier now, and the highs, okay, we do are not even in the London session hasn't even opened yet, so we don't have like really any volume here. But once again, I do think I do like to make my videos at this time of day because its market is moving so much slower, so it's a lot easier to explain. So when we are in the high years, okay, we don't really want to see much buying really, because obviously, like if there are a lot of people interested in buying, they might think, okay, this is gonna go up, okay. So the market buying here shouldn't be really high, okay. Like there shouldn't be much market buying into the highs here if this bell curve should hold, okay. So right now, for example, you do see only 4 lots here, you saw 4 lots here, you see even 0 lots here on the uptick, okay. Now you do see 84, 96. So now I'm thinking like, okay, this might be actually breaking. And you do want to see, once it approaches here, you do want to see the sellers here, okay, the market sellers, like hit it back down because they think, okay, no, this is too expensive. I'm gonna shove it back down, okay. And you don't really want to see like the limit buyers here stepping up, okay, like adding a lot to the buy position, because they think, usually they should think, if this wants to come lower, okay, they should think like, why would I buy here limit, okay, if the price probably gonna come down to the low of this bell curve again, okay, and I can also buy down here, okay. The only reason when they want to limit fill here is when they're thinking, okay, this price might be actually like the best entry I've get because this is gonna break out soon, okay. So when you do see strong reloading on the limit here at the top of a bell curve, okay, and also you see strong market buying, especially which we talked about in yesterday's video, if you see institutional buyers of 50 plus lots, so a lot of 50 plus lots, big buyers, okay, like hammering market buy order here, refilling the limit, okay, then this kind of looks like, okay, they want to take it higher here, okay, at least for a push. So right now, even though we're at a ridiculously high price here for today and at the high of day, this looks like it wants to break. Okay, we do see strong market buying here. We do see limit filling here. This hangs around here for long. Okay, usually also the time, how long it hangs around at that low node. Okay, is also important because you shouldn't see it hang around at this high price. Okay, so now you see break. You see this volume hitting here, like a lot of buyers hitting, a lot of buyers. Now big sellers as well. Okay, that's kind of you want to look at. But those 222 lots just been taken by the bid, okay? So someone refilled and took all those 122 lot. So this does look like a breakout to me. Obviously, I'm not trading this time of day because market just doesn't move the way I like it to. But if this were to the RTH session, this looks like it wants to break. We do see like strong limit buying here. We do see like strong market buying here at the highs, okay? Obviously, we do see also big size of sellers hit here, but they are not really shoving this back down, okay? Like they should really get this down here. But I don't have the best feel, so obviously, like I'm just rambling here a little bit, okay? But just so you get a little bit of feel for this, okay? Like that's why I don't like to trade the pre-market or like really any besides the RTH because it's just not moving fluid enough, okay? And just not the way I used to like it to move. So, okay, then the next thing, okay, like when do you think like, okay, a breakout is happening or a bell curve is accepted or whatever, okay, like I look at it this way, okay, this is just what works for me and what I like to look on. So this is general what market profiles are and stuff like this, okay. Now I want to be talking a little bit into how I use them, okay, as well. So I do like to see it move around, okay, obviously, and I like to see them if they're at the high, getting rejected here pretty fast, okay, they shouldn't stay at the highs for too long, okay, same for the lows, obviously, on the other side of the trade. If it stays up here long, okay, and if it, especially like we said, have strong market buying to the upside, if it has strong reloading on the limit side, then this might break, okay, and stuff like this. Now, if we do break, okay, to one side, and if we go into another bell curve, okay, so like for example, like especially this is very nice if you do have already existing bell curves because then you know, like usually like when, for example, this breaks to the downside, okay, now it has to move through this previous bell curve again here, this small one, and obviously the bigger one as well, but kind of the small one first, okay. So I do like it more, okay, if we're not in price discovery where we do not have any like previous bell curves, recent ones, okay, of the day of the same session. So I do like it to break into a previous bell curve. And then if we do break into a previous bell curve, for example, if we would break lower here, okay, if we manage to push past the middle point here, okay, not past of the value price, the previous point of control of this bell curve, okay, which the most traded price here is, okay, which sticks out here. If we trade through this, okay, usually what happens, not always obviously, but most of the time what happens is that then we're gonna trade inside this bell curve at least, okay, and this is kind of getting accepted. Obviously we can get slight overshoots and stuff like this or slight undershoots, but usually then it has to like work its way through this bell curve again, especially in the ES because it's very choppy, okay, like then it has to work its way around here. So if it breaks down here into this, okay, and we see it break through this middle, okay, then see it slowly retrace here, then maybe it comes down here again, okay, maybe up here, struggling a bit, maybe trying to test lower, and stuff like this. Okay, then I say, okay, this bell curve is now accepted. Okay, if on the other hand, like this just breaks fast here and then goes back into this bell curve, we could still be fine if it's just hovering around like at the top or bottom of the previous bell curve. Okay, like if it breaks here, chook, poof, and goes back in here, like I'm still not sure. Okay, like this could break lower, but it could also go back into this. Okay, so I do like this middle points here, and obviously all the time the way it moves and reacts is like the reading order flow is like the market is telling you a story all the time. Okay, like it's talking to you, okay, in a language that you are not good at in the beginning, okay, and you're getting better and better at speaking this language with the market. Okay, it's communicating with you all the time. Every tick, every number is like the market talking to you. Okay, the way it moves. And there also, like with order flow, like most of the people think like you have to look at the precise numbers and stuff like this, which is obviously not true at all. You kind of look more at like the way it moves and the way it takes those orders. Okay, but back, I'm wrapping off it again. So yeah, so once it comes back, okay, if we break, for example, low here, okay, like if we break down here, okay, into this bell curve, but we can't make it past the middle, so just to the top, and we fall back in. Now I do look at this previous bell curve again, and I do want to look at if we can manage to get all the way to the point of control of this bell curve again, and how the price interacts here. If we do get back here, okay, like most of the time this is a fake break, okay, like, and this was just grabbing some liquidity, maybe some stops, and we're still stuck inside this bell curve. Okay, if on the other hand we just if we break through and then hold at the low of this bell curve, for example, we see strong refilling on the offer, strong market selling, and then we might get the final push through here. Okay, so but obviously like it's no secret or ultimate edge. Okay, you're gonna have to put this together. Like trading, like you have to read, like I said, like you have to read everything. Okay, like I do have my charts up, my 30-second, my 40 seconds for bigger ideas. Okay, where like this price action telling me that the market wants to go. Okay, what is price action thinking? Well, what we want to do. Okay, then we want to see like what is order flow thinking, what is the bell curves doing, how are big and small buyers interacting with each other. You have to put all together. Okay, yeah, anyways, that's it for market profiles for now. If you do have any more questions on them, I think I got pretty in depth now on them. Like I don't want to make the video all too long, but I do think it was necessary like for this length. If it's still not enough, like feel free to contact me on my Discord. I love to talk trading. I love nothing more than to talk trading actually. So like feel free to ask me anything. I'll always answer and respond. That's it for now, and I hope you stay tuned. I hope you love this series. Obviously, like if you share it with your friends, if you like it, comment it, subscribe, turn on the bell, all the stuff you know from all the other YouTubers, it does help me out. I do really enjoy YouTube. I love it like right now, and yeah, I'm enjoying it, and I'm enjoying my journey here, and yeah. Anyways, have a nice day, have a nice evening, have a nice trading session today, and see you guys in my next video. I'm out.